Well, Tanzania has priced a $600 million 7-year amortising bond that's at par to yield 600 basis points over Libor. Now that's reaching the maximum amount it had planned to raise through the privately placed floating rate note. We're crossing over to Yvette Babb, Africa research strategist at Standard Bank, to delve more into this latest development. So of course, Yvette, Tanzania joining the likes of Namibia, Zambia, Angola in raising funds in international capital markets. Can they afford to pay these type of rates, 600 basis points above Libor?
Yes, I think they can. I think it's notable to state that Tanzania does have relatively low levels of public debt when one looks at the broader scope of African economies. So their public debt is about 40% of GDP in nominal terms, but that masks the fact that their external debt is actually highly concessional in nature. So if we look at the servicing costs of this debt, it's extremely low. It's actually only about 4% of the overall budget, which is dedicated to debt servicing costs, and it's about 2.5%, or the ratio to exports actually 2.5 in terms of debt servicing costs. So they have very low servicing needs at this point in time as a result of the very low rates of interest rates that they've paid over previous loans that they've received, as well as the very lengthy non-repayment periods that they've received under concessional forms of loans. So this will indeed add to the external debt levels, but I think they do have sufficient capacity to be able to repay this form of debt, as well as potentially further non-concessional forms of financing.
So as you're saying, potentially being able to increase borrowing even further offshore. Looking at the $600 million that they raised, that's the top end of their target. So what's investor appetite? I mean, how would you describe the kind of view on the attractiveness of investing in Tanzania right now?
Just to clarify, in terms of further issuance, I don't think they will issue in the short term. They are constrained by debt requirement or debt ceilings under the IMF program that they currently have. So they have a policy support instrument with the IMF that is set to remain in place till the end of June. Under that program, they are now very close to the ceiling of the amount of non-concessional debt that they are allowed to accumulate. So this issuance is like to be the last for at least in the foreseeable future under this program. We're to see if they have room under a newly negotiated program with the IMF. With regards to the appetite for this issuance, we've seen that it was very well received in the primary market from a wide array of investors. We've seen investor clients from the US to even in Europe, as well as the UK, as even other countries on the continent, expressing desire to gain exposure to Tanzanian assets. So we saw that it was very well subscribed at the primary market, and we've even seen that on the secondary market since it started trading today, that there's further appetite, and we've seen the bond rally somewhat in the secondary market today.
What would you say is driving that interest in Tanzania right now from mainly developed world investors, is what you're pointing out right now?
Absolutely. So there's obviously a very large global appetite for African risk, and that's been reflected over recent issuers, including that of Zambia. We've also seen, obviously, that the global levels of liquidity remain quite high, although there are fluctuations in risk appetite. So the timing of these bonds is sometimes tenuous, but we saw that this issuance was very well received. And the reason for that is obviously the fact that there are limited issuances out of Africa, and there is particularly a limited amount of Tanzanian issuances on the market. So this is the first publicly traded issuance from the Tanzanian government, and there's a strong desire, I think, to benefit from a very appealing growth story in the Tanzanian context, as well as obviously being able to, or at least the pricing of this risk of this asset was quite favorable in terms of the structure of the deal. So the 600 basis points over 6 months Libor proved fairly attractive for a large amount of investors. And they obviously saw that there was potential upside for this bond beyond the primary issuance.
Certainly is interesting. What are the funds going to be used for? I mean, have they ring-fenced these funds, or are they going to be used for broader fiscal plans?
If we look at the fiscal priorities, there's a clear intention to increase infrastructure spend from the Tanzanian authorities. So assumedly these funds will be directed to infrastructure investment in Tanzania, and this is likely to include a large number of road projects. They obviously have plans to increase their electricity generation capacity, so we believe these funds will also be allocated to new power plants that are set to be embarked on very shortly, and that's also related to the developments in the gas industry. So part of these funds are also likely to be used for the construction of a gas pipeline between the gas fields in the southern part of Tanzania and the newly to be constructed thermal electricity plants in Tanzania.